Chanda Kochar now details her earnings quota.
Overall loan portfolio grew by 13% on a year-on-year basis as on 31st December 2014. The loan growth was supported by continued growth in the deposit base. The bank's CASA deposits grew by 14% year-on-year on 31st December 2014. During this quarter, we added 4,927 crores to the savings account deposits. Our CASA ratio as on 31st December 2014 was 44%. Reflecting the strong franchise on the funding side as well as on the loan growth side, our net interest income grew by 13%. The net interest margin, in fact, improved slightly to 3.46% compared to 3.32% in the same quarter last year. In fact, our domestic net interest margin was 3.88% during the quarter ended 31st December 2014. The non-interest income grew by 10% during the third quarter of 2015. Fee income growth was 6%, which is mainly due to the subdued corporate activity. The bank made treasury gains of 443 crores. There was 348 crores of dividends from subsidiaries and net exchange rate gains of 192 crores relating to overseas operations. We also continued to maintain our focus on operating efficiencies, and our cost-to-income ratio has improved further to 36.3%. As a result of improvement in net interest margins and continued focus on costs, our operating parameters remained very healthy. Now coming to asset quality and provisions, given the challenging operating environment, the banking sector has continued to see additions to NPAs and restructured assets. Further, given the prolonged economic slowdown, the banks have also seen higher slippages from restructured portfolio into NPAs. Given these trends, the bank's net NPA ratio as on 31st December 2014 was 1.12% compared to 0.96 on 30th September 2014. The outstanding net restructured loan portfolio was 12,052 crores on 31st December compared to 11,020 crores on 30th September. During the third quarter, the bank made provisions of 980 crores. Coming to our subsidiaries, the domestic non-banking subsidiaries sustained their strong performance. The life insurance subsidiary made a profit of 462 crores in Q3 2015, and the general insurance company made a profit of 176 crores in that quarter. Both the life and the general insurance subsidiaries maintained their market leadership amongst the private sector players. Our asset management subsidiary achieved a 43% year-on-year growth in profit after tax to 67 crores. The profit of ICICI Securities increased from 35 crores in Q3 2014 to 76 crores in Q3 2015. The consolidated profit after tax was 3,265 crores in Q3 2015, and the consolidated return on equity was 15.5%. The bank continued to focus on the customer franchise and expanding the distribution network. During the quarter, we have added 35 branches and 352 ATMs. As of 31st December 2014, the bank had a branch network of 3,850 branches and more than 12,000 ATMs. We also continued to strengthen our technology channels for increasing customer convenience. As in every quarter, even in the third quarter, we came out with some technology innovations. We launched the country's first contactless debit and credit cards that use the near-field communication, that is the NFC technology. We also extended our Pockets by ICICI Bank application on Facebook to the non-resident Indian customers. And we recently launched banking services on Twitter, and again we are the first bank in India to do so. We will continue to launch new digital banking propositions in days ahead. Our capital adequacy ratio has also continued to remain very strong. As per RBI guidelines on Basel III norms, including the profits for the 9 months, the capital adequacy ratio for the bank works out to 17.57%, and the Tier 1 ratio works out to 12.96%. Thank you.
Hi, Mrs. Kochhar. This is Ritu Singh from CNBC TV 18. Could you take us through the fresh slippages this quarter, the total gross, as well as the slippages from the restructured accounts, and this trend that you mentioned of more and more restructured accounts slipping into NPAs? How long do you see that continuing?
So during this quarter, we saw gross NPA additions of 2,279 crores. But out of that, 776 crores was really the slippage of restructured assets into NPA. So in the beginning of the year itself, we had mentioned that we expect the additions to restructured assets and NPAs during FY15 to be on similar lines as FY14 and not exceeding FY14. During the year, we have seen that trend hold up for us, but except that the fact that there have also been slippages from restructured assets into NPAs. So if we take out the slippages, because in a way these are not additions, new additions to stressed assets. These were always counted as stressed assets in the past. If we take that slippage out, the new additions to restructured and to NPAs still for the year as a whole should not exceed the number of 2014.
Any write-offs and upgrades in this quarter and the restructuring pipeline from here on?
Yes, we've had upgrades of 507 crores, which is mainly recoveries. We've also had write-offs of 183 crores and a small sale of about 50 crores to the ARCs.
Ma'am, on the restructuring pipeline?
The restructuring pipeline currently is about 2,300 crores.
Hi ma'am, I'm Himadri from Z Business. Ma'am, जो NPAs है वो ज़्यादातर कौन से sectors से आए हैं?
ये actually corporate assets में काफी spread out हैं. इसमें specific sectors का नहीं है. ये actually उन companies का है जहाँ पे leverage levels बढ़ चुकी हैं.
और provisions जो 980 crores के करे गए हैं वो किस चीज के लिए ज़्यादातर why the provisions are higher?
उसमें से 140 crores provisions जो हैं वो standard assets के हैं. एक small amount है वो unhedged foreign currency loans का provision है. बाकी जो है वो actually NPA और restructured assets का.
Ma'am, Gopika from ET Now. You had mentioned that your restructuring pipeline is around 2,200 crores. That's much higher than what you had projected last quarter of 1,500 crores. Where is the pain coming from?
No, that was the projection. That was the pipeline last quarter. And against that 1,500 crores, we did about 1,700 crores of restructuring. So in a way, this is the pipeline as on every quarter as it gets built during the quarter.
But you see that picking up in the sense more number of cases coming up for restructuring before that April deadline?
Also because, of course, the restructuring window is really open up to 31st March. But in a way, again, as I said, when I look at the year as a whole, I think our new additions to NPAs and restructured would more or less be in line with what we had thought at the beginning of the year.
Also, could you give us a tentative idea of how much more slippages from restructured book can we look at? Do you have an idea of how much can we expect in the coming quarters?
No, I won't really give a number, but I would definitely say that this trend of slippage from restructured to NPAs has not yet come to an end for the industry as a whole. I think we'll still, for a couple of quarters, see some of the cases really moving from restructured to NPA. It all depends on how fast the economy picks up, because we must remember that when restructuring is done, it is finally done on certain assumptions of pickup of the economy. And if that pickup gets delayed, then that amount of cash flows don't come, and the restructuring package then comes into trouble. So I think a whole lot depends on the rate at which the economy picks up.
Ma'am, just wanted to understand the sense on the corporate book, because at least for the last 7-8 quarters, you have maintained that there is a conscious decision to calibrate the growth. What is the timeline do you see that this calibration or this controlled growth as far as the corporate book will continue? When do you see that the capex cycle really turning?
So I must put this calibration also in context. If you see, our corporate book has grown, but it's grown about 4%. But that does not mean that new loans have not been done. It also means that while some new loans have been done, on some of the existing exposures, we have tried to actually, in a way, diversify our exposure. So a mix of both these have resulted in about a 4% growth in the corporate assets. But I would say that for a few more quarters, the growth that would really come on the corporate side will still mainly be on the working capital. The growth on account of the new capex cycle is at least about 3-4 quarters away, because right now the corporates are really focusing on deleveraging the existing balance sheets and closing the last mile issues on their existing projects.
All right, that's the ICICI Bank Management.